Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, so we're going to talk about the Middle East countries, the sovereign wealth funds,
Yes.
buying U.S. real estate. They've just started. This is sort of a relatively new thing. And here's an article that we got this information from. Why U.S. real estate is hot property for Middle East investors. Let's start with... first of all, what is a sovereign wealth fund? Where do they get them? Where do these Middle Eastern countries, whether it's Saudi Arabia, UAE, etc., where do they get the money?
They get it from their oil companies.
Oh, okay. So they have oil companies. Okay. Now, this is not the first time that Middle Eastern countries have tried to invest in something outside of oil.
No, so they've done other things. They've done things like airlines.
Airlines, right? They tried to, they still do, but they don't make money out of it. It's not a good investment so far.
They did banking.
They tried banking, the 9/11 shut them down.
Right.
Right.
So they've made other efforts in that direction. Look, they understand that two things. One, the oil will not last forever. And two, particularly with the movement toward green energy, they won't be able to sell as much oil as they've been selling forever. So they're using the wealth that they've acquired from their oil sales to diversify their portfolios and generate revenue and further increase their wealth. What they're bringing to the table is $800 billion. That's billion with a B.
B.
And out of that
Rhymes
money...
with P, it stands for pool.
Yes. And out of that money...
Who knows what that is a reference to?
Put that in the comments if you know
You have
what...
to put in the comments.
Yes.
B with a capital B, and it rhymes with P, and it stands for pool. Okay. All right. Keep going. Sorry, I interrupted.
Okay,
I thought it was funny.
So $800.
Okay, they have a lot of money.
All right, $800 billion, and out of that, they had originally planned to deploy about 40 or 45% in the U.S. They have now decided to deploy 60% in the U.S. That's a lot of money, and their primary target is actually real estate. So let's talk about that. So what kind of real estate are they investing in? Are they investing in office buildings? No.
Nope.
Are they investing in commercial? Yes. They're investing in industrial, some retail. Their main focus, however, is, drum roll please, their main focus is residential.
Residential. Here is a quote from the article. Recently, the world's largest sovereign wealth fund, they're the world's largest, the Abu Dhabi Investment Authority, with $800 billion in assets, increases target allocation for North America from 45% to 60%. They're betting on the U.S. Why is... Okay, this is they are going to be a force now for years, competing with the people out there who haven't bought a house yet, who are waiting for the housing market to crash down to pennies on the dollar so they can go buy a bunch of houses and be wealthy homeowners, right? Because immediately the home prices will crash. They'll buy a bunch of houses, and home prices will instantly snap back up to current prices, and they'll just get rich quick, right? Why real estate? Why do they want to buy residential real estate?
So residential real estate in the U.S. has a lot of advantages. First of all, we are one of the few countries that will just let you do that, because not all countries let you buy residential real estate. They are very appreciative of our law and order judicial system that's very predictable. They are appreciative of property rights in the U.S.
Yep.
So all those things go towards stability. So they want stability. They want to invest their money in something that's going to be stable. The other reason is they've been looking at what residential real estate can provide for them, and between appreciation and rent increases, it's a really good investment.
One of the things that they said in their quote was they said every single year it's going to be harder for people to buy real estate because more of it's being... Homeowners have it and they're not selling, and then investors are buying up whatever they can, so it's going to be harder every year. And what they said is this creates this pool of renters who every year it's getting harder for them to buy. And if they can't buy, they're forced to rent. They'll have the ability to raise rents. And they've been talking about how much they're able to raise rents on a annual basis to basically not just the appreciation of the homes, but they could just keep ratcheting up rent and keep increasing their ROI.
Right.
So if they're making a 6 or 7% ROI off the gate, after 10, 15 years of rent increases, they could be making 20% on their money, which is a pretty darn safe investment to get 20%. They also, now you're saying, but why don't they go to Spain and other countries? Here's the thing. The U.S. is now the most preferred market, while real estate is now the most preferred asset class for all Middle Eastern-based sovereign wealth funds. So there's more than just this Abu Dhabi one. There's a bunch of them. And the U.S. is their main sector or main region, and real estate is the main sector.
Right.
And this is relatively new. Another article I read where a lot of the wealthy are flocking to Manhattan to buy up residential, just, super high-end luxury real estate.
Right. And it's happening all over the country.
Yeah.
And keep in mind, you've got these Middle Eastern entities doing this, but have we forgotten about the BlackRocks and the other big institutional investors that are also purchasing?
They have competitors.
So what that means is the competitors are actually all of these institutional investors and Middle Eastern investors, and all of these investors are competing with you and I, okay, to purchase residential real estate. So it's something to really keep in mind. So we've got, kind of going back to what we've talked about before, we've got 42% of residential real estate being owned free and clear. So now you're kind of getting this picture, I think, a little better. So it's not just individuals that have these homes that are free and clear, right? We've got all these institutional investors, we've got these foreign investors. This is big money that has these properties and is continuing to purchase them. And to kind of give you an idea, in 2020, it was about 37% of residential real estate that was owned free and clear. By 2022, it was 42%.
It's 42%.
So that means that we've gone up 5% in just a couple years. It gives you an idea of the amount of residential real estate that is being locked up that will not turn the way residential real estate normally turns with an owner-occupant. It will not turn, every few years. The other thing that we've seen is that residential real estate about 5 years ago was turning about every 10 years. Now it's every 13 years.
And there's the top 20 cities in the U.S., it's 15 or more years.
Right.
And in cities like San Francisco and New York City, it's 17 or 18 years is the average time those things turn. People don't sell. I don't know if they just buy a place and live there their whole life, or they just don't.
Right.
They're just wealthy and don't need to sell it, but that's the median. So half the people have it. Think about, I think it's New York City was 18 years. Half the people in New York City have owned their place over 18 years.
Right. So this is important to understand, because that means that these are properties that are not coming to market. There is no opportunity for anyone to purchase them. And this, again, grows that whole pool of people who are stuck renting.
Yep.
And it's really important to think about that. We're not telling people to go out and buy today, but we just want you to understand that the more time goes on, the less homes there will be available to purchase. And this is not going to get better anytime soon, particularly because you've got things like the Sovereign Wealth Fund and other funds like that that are ratcheting up the amount of money that they're going to spend on residential real estate in the U.S. So that means taking more homes off the market, making them into rentals, and less homes available to purchase. And remember, home builders simply cannot build enough to make up for that. We're already short homes. And then, of course, the other thing is we have an aging housing stock, right? So homes are getting older, and so maybe not as desirable. Maybe they're functionally obsolete. So all of this plays into it, because these buyers that are institutional, whether they're domestic or foreign, they're not going to purchase residential real estate that is functionally obsolete. They are not price sensitive the way an owner-occupant is going to be. So they're going to purchase the better homes, the newer homes. So that's an interesting thing to note as well. So I think we're going to see some interesting dynamics going forward, and we'll continue to watch that and do videos and let you know what we see out there.
Oh.
Are you seeing that in your market? Tell us what's going on. I mean, are you seeing a lot of homes that are purchased by sovereign funds? What's happening? We'd like to know where that is. And,
I don't know how
and
they
tell
would
us
even know,
about it.
right? Wouldn't they be in an LLC or a trust or whatever?
They would, but sometimes it makes the news in their local market.
Yeah, maybe.
So if it does, let us know.
Okay, cool.
All right. Do you have anything else?
I don't think so. I think this is a new thing. I think this is going to be more pressure. I think it makes whatever interest rates are less of a factor. As long as cash is rolling in to buy houses, I think this, in the last 12 months, 33% of all homes were purchased cash. I think that number just goes up.
Mm-hmm.
And then that squeezes out the people who are not putting a ton of money down.
Mm-hmm.
So, and it squeezes out people who are interest rate sensitive. So to all of you who are saying, yeah, but these interest rates are making homes less affordable. I've never said that's, I have never disagreed. Never disagreed with that. You guys are 100% right. It makes homes less affordable. It doesn't mean it makes home prices. No person's forced to drop their price so you can have an affordable home. I'm sorry, but I've just never said it forces prices to drop because it's never happened.
Right.
It's never happened.
Right. So, there are always opportunities in every market. So if you come across a good opportunity, share your story with us. We'd love to hear about it. Please leave us comments. We appreciate them. Please be nice to one another in the comments. Like the video, subscribe, hit the notification bell, share the video, and we'll see you on the next video. Bye.
Bye.